state line, California border right here, leaving Las Vegas, 91 octane, $6.70.
There we go, should we top it off?
It's Wednesday, April 27, 2022. NASDAQ down. Dow Jones was up around 450 points earlier today, finished only 62 points in the green. What is going on? It seems to me, Matt, that people are so far into these markets, they cannot get out.
Yeah, market sentiment's really weak. I think for sentiment, today was probably worse than yesterday, because today was the day that everyone would have expected the cheerleaders to come out, them to rally these markets and to say, hey, look, it wasn't as bad. We recaptured a lot of yesterday's losses. It did not happen.
And what's really interesting here is Russia now has cut off gas to Poland, and I believe it's Bosnia. Don't quote me on that, but it's Poland for sure. I believe Bosnia also. And markets don't even flinch at that, as they were up 450 points earlier and finishing up 62 points. And another thing that comes to mind is the administration still saying that they're going to pay down college tuition debt, that people just don't have to pay their bills, and more stimulus could be coming.
We're talking about forgiving the student loan debts, and or giving each person $10,000 to reduce their loan balance. It's incredible. I mean, that's inflationary. That's going to be adding more to the debt.
Yeah, somebody has to pay for that, as we all know. There's no such thing as a free lunch. And so, yeah, that's just going to guarantee more inflation if that happens. And as we talk about these markets today, new home builds under construction, new homes under construction right now, 1.62 million homes. And we are seeing more people now looking at adjustable rate mortgages as demand doubles, as interest rates hit the highest level since 2009, 30-year fixed rate today, 5.37. And that's if you have perfect credit, Matt.
Yeah, I guess we haven't learned much from 2008. Going back into offering these ARMs, these adjustable rate mortgages, because people can't, qualify to get themselves into a standard loan. The rates are higher, so now they're going to try to suck everybody into these adjustable rate mortgages. As interest rates continue to rise, those loans are going to adjust higher.
So, as the market is cooling off, the housing market, I mean, this is how they're going to entice people back in. Adjustable rate mortgage share of applications last week was over 9% of the loan count and 17% on dollar volume. At 9% ARM share, that's double of what it was just 3 months ago, Matt.
Yep, moving people back into the adjustable rate mortgages.
So we hear that, oh, they're going to do 40-year, 50-year. They don't even have to do that. They'll just bring adjustable rate mortgages back in like we saw back in the heyday, and people are going to absolutely get suckered into this. Nobody seems to learn a lesson or from history. It wasn't that long ago, back in the 2008 bloodbath. Applicants to refinance a home loan right now fell 9% for the week, and were 71% lower than the same week a year ago. Total mortgage application volume fell 8.3% last week compared with the previous week, down 17% from the same week a year ago. What is this telling us, Matt?
Well, the applications are falling, and that's why they're rolling out the adjustable rate mortgages again, to try to entice people to come back into the marketplace. Buy a home, take on a better loan that has adjustable rate, keep your payment low to start. What they're not going to tell you is that payment is going to drastically rise as the Fed continues to normalize these rates.
And as we saw the market, the Dow Jones up 450 points earlier today, based on absolutely nothing but more bad news. And again, it only closed up 62 points. And I think this is a bad sign, Matt, especially maybe for tomorrow. I don't know. But they needed a huge rebound today.
And I thought there would be. I think we discussed that.
This morning when you saw the market up over 400 points, we're like, there it is.
And we closed yesterday's show saying they will probably get these markets juiced back up today. Today was a really bad sign. Bad omen, I think, for the markets. I would expect tomorrow to be potentially a bloodbath. We'll see.
And there's just more bad news. U.S. pending home sales tumble for 5th straight month, down 1.2% month over month. New home sales down 12.6% year over year and 8.6% in March from the month before. So going back to this whole Russian thing too, I mean, look at the bad news here today. I can't even believe that they got the Dow to close up 62 points. Poland confirms Russia to halt gas delivery Wednesday if payout not in rubles. And this seemed to have absolutely no effect on Wall Street today.
Nor did it reverse gold. I thought gold's earlier losses would have been reversed when that news hit. Didn't even have an effect on it. So they're still tamping down the metals prices also.
And yesterday, Robinhood to fire 9% of full-time employees to improve efficiency. What does this tell us? And I can't even believe this doesn't have an effect. That's a lot of people.
A lot of people. Layoffs are coming.
Bank of America sounding alarm over collapsing freight demand. They're saying we have a softening demand, loosening market, deteriorating real service, and price softness in market. And this brings me to the topic of what's happening in China as we're seeing these massive shutdowns in China. They're going to be shipping less products to America, and there's going to be less freight demand, less ships, less product. And what will America do, Matt, with less products, less pharmaceuticals? What influence or what effect does this have on the U.S. economy and the consumer?
Well, we are wholly reliant on Chinese goods and Chinese products. We don't make much here anymore. We store a lot of Chinese goods, and no, it's going to have a huge impact.
So chronic shortages of a few items will eventually evolve into chronic shortages of hundreds, if not thousands of items. And remember, there's chemicals, there's different types of food, aluminum, rubber. Farmers can't get tires for tractors or parts for tractors. Same thing with the automobile industry here, the trucking industry here. Parts are getting hard to get. And we could just see things really, really seize up in this economy when deliveries can't be made, especially food deliveries. And while we were in Vegas for a few days, and I look at people walking around on their phones, completely zombies. And you look at the condition, the physical condition of people, and I'm not here to brag. I eat junk food from time to time, and I should be working out more. But people can't even walk. They were like hobbling, 80, 100, 200 pounds overweight. And when we talk about food shortages, food crisis, what are people going to do if those pharmaceuticals don't show up, if those food shelves begin to become very, very bare, as we're watching people at the buffets, walking around with 2 or 3 plates? This is going to be a very, very hard time for most Americans, because I think they're going to have an extremely difficult time adjusting to what is coming.
We have a just-in-time delivery system, so the warehouses need to remain stocked full so they can pull from those warehouses to restock the store shelves every 3 days on rotation. Once those warehouses run dry, if those Chinese goods aren't coming in, we're going to have a real problem.
How does the average American adjust to a food crisis, though? I mean, people, they want instant gratification. They're on their phones. They want to order something from Amazon and have it tomorrow. They want to eat as much food as they can get. They're addicted to pharmaceuticals. What happens if those pharmaceuticals don't show up? What if that food isn't as plentiful as it once was, and people don't have the comfort as they once did to get food or to get pharmaceuticals or to get supplies? What is the average American going to do?
Well, the sad response is people start dying. If people don't have their insulin for their diabetes, if they don't have their 4 loaves of bread a day, whatever they eat, they're not going to survive. And most people don't have anything put away. They haven't stocked food and water. They haven't tried to to lay in supplies for a rainy or a dark time, and that's probably coming.
I cannot even believe, and I'm glad we were out here in Vegas for a few days. It is really an eye opener, and it's good to get out, on the streets. It's really good to get out and just get a barometer or a temperature check of what's going on. And people, they had the NFL draft coming. It starts tomorrow, and so today. So the town's getting very, very busy. And so, you have so many people there that know every football player, that know every stat, but they have no idea what is happening to the U.S. economy, what's happening to their pensions, their 401ks. They have no idea what's happening to the purchasing power of their dollar. They have no idea. And yet they want to watch men run around with a ball, yet they take no time, do nothing to protect their own futures, their own wealth. We are just absolutely asleep here, ladies and gentlemen. I'm going to let Matt close it out, but it's really disappointing to see the condition of people mentally, physically, spiritually, and financially. They have no preparations for this economic downturn, and that's food, water, assets, security, and whatnot. But they could not tell you where the Dow Jones was today, the NASDAQ, an ounce of gold, a barrel of oil, where the US dollar is. They don't know anything like that, but they'll let you know that they know what Tom Brady had for breakfast today. None of this has any effect on my life. What does have an effect on your life, my life, and everybody's life is the U.S. economy, the U.S. dollar, and where all this is going. Matt, please finish.
I agree. I totally agree. I mean, we were in town for a luxury watch convention to see some colleagues, and there is a cooling off across the board on luxury goods right now. We're seeing in that market about a 10 to 15%, and possibly in some models even more reduction right now in the trading price of these pieces. So it's starting at the top and starting to work its way down.
And I think we're going to see a time with inflation and deflation. I think that energy and gasoline and oil, those prices are going to continue to go up. Food going to go up. But we're going to see prices of maybe like such things as luxury watches, automobiles, real estate, things like that at some point begin to come down. But the things that you need to survive, like food and commodities and energy, those things are going to continue to go up. And we could already see jobs being replaced in Vegas. There's not even a valet anymore. You just put your credit card in a machine, it contacts somebody, and they bring the car to you. There's no human there to take your money or to say hi to you or to greet you. You just put your card in a machine and they go get your card and bring it to you. So they're already cutting people out. And just to close really quick, a lot of people in Vegas, I cannot believe what it costs to eat there, to stay there, and people aren't even blinking. How are they doing it? I guess if you can't afford it, you charge it. If you can't afford it, you go there and you pay what they ask. But there are so many people asleep. And this just reinforces with me, and I'm sure it reinforces with you, how bad this downturn is going to be, because people are so unprepared for what is about to happen. God bless. Stay safe.
Cookies.
Oh, and cookies. I want to thank Matt's kids, his nice daughters, for the cookies this weekend. So shout out to you guys. Thanks a lot for the cookies. Have a great day, everybody.
Thanks,
God bless.
LMK. Be home soon.